What's going on, YouTube? Welcome back to Stocks by the Numbers. Today is Thursday, the 26th. We closed up about 15 minutes ago. I know I'm coming to you guys late, but I just wanted to do a quick update here on a company that we looked at that is just consistently climbing. And we do have earnings coming up, and there's just a few things I wanted to discuss here. Name of the company we're talking about is the Chicago Board of Options Exchange. This is the CBOE ticker symbol, and this is a company I mentioned last time. This is the actual options exchange, right? And this company generates its revenue off of options fees, and the main thing you want to see is consistent increases in options volume, which the company is seeing, and that is why the stock continues to climb over time. Now, if we come all the way back here, was the end of December, was the original time that I did a video on this stock, and I told you guys what I know, saying that, it would be a good long-term play. They also pay you a little bit of a dividend to own them. Let's check it out. As you see, yielding about 1.75% dividend yield right now. The market cap is now up to $17.3 billion, which is a little high in my opinion. The PE now over 26.5. So again, across the board, the company looks great. They're earning over $6 a share. You can see beating on the EPS side for the last several quarters. And basically even, just look at that over the years. Of course, we see the big drop in profitability in 22, but we're actually seeing that with pretty much every single company across the board for the most part. And basically what you're mainly seeing is just that consistent, steady overall increase in revenue over the last couple of years. And the reason being is because we have more and more younger people and younger money now. Everyone has their own trading account, and usually the less you have, the more inclined you are to do options, in my opinion anyway, especially, if you're a younger person who could take on this risk and, you have your job and some income coming in. Now you have a couple extra bucks and you want to try to turn, let's try to turn 100 into 250, 300 real quick. Well, the quickest and fastest way to do that is going to be with options, as I'm sure a lot of you guys see, as opposed to just buying shares. It would definitely take much more time. And now the secret is out, right? So now every day we have so many people waking up now on their trading accounts, and what are they primarily doing? They're trading options. Even if they have long-term blue chip stocks like Coca-Cola, Hershey's, IBM, something like this. Remember, when these companies post earnings, sometimes you got these older guys who've been holding these stocks for years and decades. If the company posts earnings, hey, if they beat, I'm fine because I own the stock. But if they miss, what happens? I'm just going to lose a chunk of this investment that I've accumulated over the years. No, you buy puts to protect your downside. That's why basically any kind of avenue you're going down, options are basically always in line and in play with what you're trying to do. Or even if you don't primarily make it your focus, they can definitely be correlated into your strategy. But anyway, going off on a tangent here, the stock today, $165.38, hitting a high of $165.87 not too long ago. And basically, first of all, on the chart, this almost looks like our neckline, and we do have a potential head and shoulders forming here. So I have a feeling that the stock may be down a little bit tomorrow, but overall you can see this from the last earnings report. You can see we are we're rising quickly, but we are beginning to tighten here, and it does almost resemble like an ascending wedge. Now, on the technical side, this technically means that we're supposed to break at the apex and drop down, and that would kind of line up here with these earnings as we see coming out November 3rd. Estimates of $1.86 a share and a touch below $480 million for the quarter. Now, I have two issues here, right? First of all, the stock really went on a tear. Again, we looked at it here. It was, 123, 124. Then I actually did an update video here, August 4th. And I mentioned a ascending triangle, I think, and then we had this pop up. And then, so the stock went from mid-120s. Then I did an update video at mid-140s. Now I'm doing another update video at around the mid-160s, right? So if you initially got into this position, again, I know it was slow, steady, boring, may not have popped 10-20% in a day to make you instantaneous profits. However, looking at it now, you can see over the last 10 months, you could have made a solid, steady, stable 33% return on your principal, roughly. And of course, you're getting paid a dividend the whole time to own shares. So, this is what I talk about. This is the difference right here between trading and investing, right? When we trade, we're looking for double bottoms. We're looking for, short squeezes, descending wedges that are lining up and the stock's ready to pop out. That's, how we trade. When we invest, the fundamentals come into play even more than people want to give them credit for. And I consistently say things like that. And again, you see with a situation like CBOE, you definitely would have reaped the rewards here. But basically, now I think, in my opinion, we may actually be too high. Because look, the last couple of quarters, the company slightly missed, right? So earnings, well, revenue, I will say, revenue has been inconsistent. The EPS side, the profitability side, has been coming in above analyst expectations, which is why they were so pumped about it here, because of the profitability side. But more importantly here, now on, 460, 470 million for a quarter, now you're talking about what, like 1.7, 1.8, 1.9 billion for the year. And now our market cap is well over 17 billion, right? So now at this current valuation, we are trading at an extreme multiple. And basically what I'm feeling here, in my opinion, I mean, it could bounce and stay in this channel going into these earnings here early November. However, even if it hits 169, 170, top of this range here, I do have a feeling that with this potential rising wedge setting up from the last earnings report, plus the fact that the valuation now could potentially be considered a little high, we may have a situation where, unless they absolutely destroy earnings estimates, even if they come in line or slightly beat, in my opinion, we may potentially be ready to break down here and kind of retest into these 150s and 140s. Now, granted, at that level, reevaluating the situation, we may then say it doesn't deserve to be this low, it should start climbing back up. And that's fine. But remember, again, this is what I say. What goes up must come down, and when they I don't necessarily want to say it's overinflated, because at least they have the numbers to kind of back it up with the options volume consistently increasing. But again, the one thing I will say, now that we rose up and continued climbing to these highs, now we're at a valuation where we're trading, 8, 9 times annual revenue. So now we've gotten a little out of control, right? And that's why I say, once these stocks run up and get out of control, what has to happen? Now it has to take a break, it has to take a breather, and it has to come back down to earth, right? So basically what I'm saying is, overall, of course I still like CBOE long term as a company, as a stock. I would try to own it down potentially in the 140s as opposed to up here in the 160s. That's what I'll say. So even though, again, I'm doing an update, and yeah, listen, it's up nice from when we looked at it, yeah, it's great. But again, pricing and timing. So if you're already in, obviously you're doing well, you're very happy. If you're not in, and now you're seeing this video and you're like, wow, this guy was right, it's been running, should I get in? In my opinion, honestly, no. In my opinion, honestly, no. And I know, again, I'm the guy who brought it to everybody, and I'm doing updates, and it turned out I was right, but again, pricing and timing, try to get yourself in maybe in that mid 140, low 140 range. That, in my opinion, would be an ideal entry here for CBOE. But I will say, though, before we look at stock charts here, let's just come over here, because we can look at the monthly volume. Right? You can see April, May, June, July, August, right? So if we go back here, first of all, this was the period ending June, right? Which means this quarter, period ending September. So July, August, September, right? Those are the 3 months that are supposedly for this quarter. And as you see, we do have some kind of mixed numbers here. And as we look at, equities here, we can see that, back here, April, May, June, and then we're looking at July, August, right, okay. So April, you can see, look, 9,800, 10.5, about 11.5, and then we just jumped, above 11, and then 10.5. So, technically, that's slightly more than what they were doing the previous 3 months. Here on the index options, right, 3,500, 3,600, 3,900, and then we have sub 3,500, but then we're up to 3,800, and then we're even higher than that previous 3,900. So that's why, again, depending on which segment we're looking at here, we could have some ups and we could have some downs. For example, I believe the Japanese. See, if we look at, April, 165, 225, 163, and then we just fall off a cliff, 79, 176, 187. So it did begin to start coming back, and overall it may not be a big drop, but technically in that specific segment, volume is down, right? So, that's why just looking at the volume can kind of potentially show you whether the revenue, is increasing or potentially decreasing for the next upcoming quarter. So that's why I just wanted to pull this up for you guys, just to show you some of these numbers, to show you that as we see, again, we're only going back here to the beginning of 2023, but you can see a lot of these numbers are basically increasing over time. And I'm going to get to something else as well. Just give me 1 second. And you can see here, look, this is a perfect example here. Total options, right? We're looking at total options for April. 13.3, 14.1, 15.38, right? But then we're up to 14.48, 14.8, and then 14.4. So, excuse me, again, I know, obviously I'm throwing a lot of numbers at you, and you're like, okay, what the hell does that mean? Long story short, right, 13.3, 14.4, so you can say that's like 1,100 more. 14.1 to 14.8, so that's what, 700 more. So now we're at like 1,800 more, and now 15.38 to 14.4, so that's what, like 900, right? But we were 1,700 plus already, so now we're still, even with that drop, we're still plus 800 on the last 3 months, with the total options being plus 800 if we added up these three numbers for those 3 months for the last quarter and these 3 months for next upcoming quarter. But again, this is how you kind of get an idea when we're talking about, CBOE anyway, because this options volume is where they actually make their money. So if monthly options volume consistently decreases month over month, then CBOE is going to go down in value, and of course vice versa. But even looking at something like the futures contracts, you can see how they bounce around, and see we were at like 227, 268, big month there in March. And then you see we drop down sub 200, right? Now we're kind of bouncing around 200, 212, 240, 236. So that's what I mean. A lot of these numbers, are increasing for the most part overall, but of course you do have your dips occasionally from month to month. And basically, if you come here, do your due diligence, like I always say, right? You have to take some time. You can't just blindly buy stuff. And then when, if you get screwed and you lose 20, 30%, you can't blame anyone for that, right? The market's not against you. It's not a conspiracy. You literally just threw a dart at the board and you said, okay, ABC stock, that's going up. I'm buying it. Like, you can't do it like that. I promise you, you can't do it like that. But again, you can see, certain numbers bouncing around, moving up. U.S. equities off exchange, look at this, 91, 87, 89, then we drop down into the 70s, look, as of late, right? So see, this is what I'm saying. Certain segments are up, certain segments are down, and I know it's kind of hard to kind of get a gist of what's going on, but of course we can just look at the total options if we wanted to. But more importantly, I want to show you something here. Market share by business segment, right? And look at the options here for equities. Just look at this over time, right? The low 26s, sub 26%, then they're up to almost 27% market share, and now look, 27.5, 27.2, 27.5, right? So the market share in this segment increased. The index options, as we see, is kind of maintaining. It's down slightly. We can see we were slightly above 99 here, 99.3, 2, 1, and then you can see we get flat, and now we're slightly sub 98%. But again, where the numbers go down, in other segments the numbers go up, just like we saw with volume, we're seeing here with market share, right? And if we look at something like if we look at the total options, my apologies, if we look at the total options market share, just look at this over time, you can see 31.7 up to above 32, breaks 33, right? Tries to maintain 33, and then look, 33.7, 3.2, 3.5, 34.2, right? So if we go back from the time the ball dropped to last month, September, they're up 2.5% total option market share. This is what I'm talking about. This is why when we look at investing, I tell you guys all the time, follow the numbers, follow the money. This is what I'm talking about. This is why, whether CBOE, when I first looked at it here at 123 or wherever it was, again, look, it went up a little bit and then it dropped down a little bit. And I'm sure people were like, oh, it's down, 6-7 points. I wonder what this guy's thinking. I'm not thinking about anything. Because I know all I got to do is give this time and I'm going to make 20-30% while I'm collecting dividends. And again, that's more in the short term, right? It's only been 10 months. It hasn't been, years. So that's what I'm talking about. When you're talking about these long-term investings, follow the money, follow the volume. Obviously, this is a specific example. But again, follow the market share, right? When these companies discuss how much share they're gaining in the actual market of their sector, all of these numbers come into play. And I'm telling you, at the end of the day, they are more relevant, in my opinion, than just looking at charts. Random ad, but we're looking here at stock charts here. We're looking at the daily on CBOE, and we can see, again, in my opinion, we do have a little shoulder, head, shoulder, neckline happening here. But we could have a pullback. But overall, we can see the stock has been just performing very, very well. Going all the way back to July, basically, the stock, for the most part, has been above the 50-day moving average for, we're talking about like 3.5, almost 4 months straight. So something like that, very impressive. But again, what goes up must come down, and now we are getting a little overinflated, so we could start to pull back a little bit. But even over here, you can see about mid-September, we had, a flash for a day or two down below the mid-Bollinger Band, and then it just immediately regained it and even popped even more the next day. So that's why, just seeing certain things like this, we can tell that the stock looks very strong. But the RSI here on the daily, we can see, is about 67. So that's what I mean. We're tapped out. And even here, where we got above 70, you can see it wasn't a big drop, but it immediately dropped right after. And of course, here as well, getting above 70, and then we dropped over here for a couple of days. So that's why I have a feeling we're kind of tapped out here on the RSI side and, of course, on the price and valuation side. So we are ready for a potential pullback. MACD looks like it's trying to potentially cross here. But, curl here, but in my opinion, I just think it continues to slide. And if we switch over to the weekly, again, see, this is what I'm saying. Look at the RSI here on the weekly. Now it's slightly north of 74, right? So this is what I'm saying. What goes up must come down, and there's nothing wrong with the stock coming down, right? But again, we have to keep an eye on these support levels, these key levels. And, if you're looking to take a newer position or potentially even add to your position, don't do it up here at 163, 164. Don't feel forced into a stock. Wait for the sell-off. Wait for the RSI to correct itself a little bit, drop down into the 60s and the 50s, right? And then you could potentially get the stock at 153 instead of 163. Or down here, maybe, if it retests the mid-Bollinger Band, you could buy shares 149, 148, right? You don't have to force your way in almost 10% higher here at 164, 165. That's the point I'm making. MACD on the weekly has been absolutely out of control here. As we see, we're talking about, almost 18 straight months. But again, this is the stock where it makes sense, right? Because I'm explaining how their business works and that the underlying asset that fuels the business is consistently increasing month over month, year over year. So that's why when we talk about stocks being overinflated or flying to the moon, when you guys want to bring a stock up or want to know which stocks deserve to go higher, it's stocks like this. This stock deserves to go higher, and that's the point I'm trying to make. That's why when I look at companies like Laser or IonQ or some of these other small cap stocks that you guys bring to the table, there is no way the fundamentals are matching that valuation. So that's why I know sure as day that the stock is going to go down well before it goes up. And again, we need to stop. I appreciate the fact again, GameStop excuse me, I appreciate the fact that something like GameStop made people a couple of bucks. Excuse me. But again, every play can't be just some short squeeze or, I'm just buying this because everyone else is buying it. Like, you have to, you have to swim against the stream sometimes. You have to think outside the box. And I can guarantee all of these other YouTube channels that you guys compare me to with 50, 80, 500,000 subs, I can almost guarantee that none of them even know that you can invest into an options exchange. That's the point I'm trying to make here. That's what you get on this channel. And obviously, if you listened from the first video, like I said, you're up. As we're talking about the company, share repurchase authorization for $250 million. We got sirens going by. We got share repurchases going. I got to end it there. This is, sometimes it all just works out perfectly for you. And the fact that we switched over there and just saw it mid-video, I mean, that's epic. I'm going to end it there. Once again, Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. Share the video, like the video, and of course, more importantly, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and they're volatile and they are very uncertain. So I want to wish everyone success. I hope everyone makes a couple of dollars. Thank you for stopping by, and I'll see you guys in the next vid.